So how you're going to do that is you are going to calculate the difference between the payments and the interest. So we're going to just put here portion of loan because we make it only the capital portion to be allowed as classification. So if you take a calculator and you say 35,000 multiplied by 12 minus the interest expense, you'll end up with 147,000 as the current portion. And then audit fees was paid in advance for the next financial year, 1,236,800. So that's a prepaid expense. We'll go under here. So you see, even though we thought we did it for the profit calculation, we must always look at the other side in order to determine how to impact the balance sheet. Shares and dividends. Okay, so we did the share repurchase. We took off the part above above um, above the average share price from retained earnings. The other portion, that's 3 Rand, must come off from ordinary share capital. Now, if you go back, you'll see we didn't have an ordinary share capital amount. So we're going to park that. And what you can do is just highlight it or tick it to note that you come back. Business did not pay interim dividends, but a final dividend was declared. We have previously calculated that at 117,000. Okay, so then that can go there. Debtors with credit balances totaling 11,000 must be transferred to the creditor's ledger. So basically what you're going to do is you firstly going to do the easy part and add 11,000 to creditor's ledger. And here, because it's a credit balance, it would have decreased the debit balance. So you're going to basically remove that impact by adding 11,000. So I'm just going to put it on the bottom. On 30th June 2021, Jimo Limited returned 10 ladies' coats to the supplier, bargain wholesalers. The selling price was say 1,750 each. The markup was 25% on cost. No entry was made. So return 10, basically stock. And you see, that is why it was good that we didn't close it. So here you're going to minus 10 into, it's 1,750 is a 25% markup on cost. That means selling price is 125% of cost. So you're going to say 10 times 1,750 times 100 over 125. Multiply by what you want, divide by what you have. And you say 1,750. That should give you, I think, 14,000. Then you sum that up because you're done with inventory now. 4,860,000. A fixed monthly installment of 35,000 to cover the loan repayments and interest has to be paid over the full period of the loan. Interest will decline over the life of the loan. Interest on the loan budgeted for the next financial year is 234,000. Uh-oh. So, remember when I went to reclassify portion, I said the total repayments of 35,000 times 12 for an annual repayment, total repayments including interest and capital, minus the interest expense of 273,000, which we calculated for the current year. But now they told us it's going to be 234,000. So this must actually be reduced. So you say 35,000 times 12 minus 234,000. Because remember, we focus on the next 12 months. Usually, if the interest stays the same each year, so you can use the current year's interest as a guide for what it'll be next year. But now they're specifically telling you that it's different. So that means the current portion is 186,000. And then you go to the non-current portion and you take it out there. And just total that. And then the current portion of the loan we have. Okay. Then the following financial indicators were calculated. Net asset value per share is 540 cents per share. That's easy. Net asset value is your total shareholders' equity. It'll be 540. And the number of shares in issue was 1.8 million. And then we can get the balancing figure for ordinary share capital. So we didn't have to worry about the repurchase because we're doing like a balancing amount using ratios. Okay, so we still have some amounts missing. Let's go total our trade and other receivables. We have one missing item. Remember what it was? In the balances, there was a question mark against petty cash, which falls under cash and cash equivalents. So all you need to do is take the 8.7 million minus the 4,860,000 minus the 381,140 to give us 28,590 for cash and cash equivalents. Non-current, if you look, we didn't have to worry about because it's totally grayed out. Okay, anywhere else the total? Trade and other payables. So the only thing we did forget about trade and other payables is the stock we returned for 14,000. We didn't actually reduce our trade and other payables. So please make sure you use journal entries as a check for completeness. And then we have that for trade and other payables. Okay, now we had one more ratio to work with. Asset test ratio is 1.2:1. So asset test ratio is your assets excluding, I'm going to put it in brackets here. So assets excluding trading stocks, it'll be the 38,410 plus 28590. And it's 1.2:1. So you're going to divide it by 1.2. Alternatively, you could have just said 8.7 million minus 486 four zeros, and then divided by 1.2. And then you will end up with current liabilities paid for 2,000. Sorry, I'm just copying the amount on the top. There we go, 3.2 million. Then you can subtract all your current liabilities to end up with your bank overdraft of 4,992.50. Now, in this situation, you didn't choose between bank overdraft or cash and cash equivalent. You had both a positive cash balance and a negative bank overdraft. Now I can total shareholders' equity and liabilities. And you can then copy that amount, put it for total assets. Remember, these will give you method marks. So if you forgot this, you lost one very easy mark. And there's your statement of financial position. Thank you.